Welcome back to America's Retirement Headquarters, the home of the Retirement Guys Formula, America's Medicare Associates, and Retirement Tax Partners with Nolan Baker. 419-794-3030 is the phone number if you want to reach out. 419-794-3030. You can also go to the website, always available day and night, arhq.com. Let's talk about clients that are already retired. Let's say one of them told you that they would love to have the kind of growth that the stock market offers, but they're afraid of losing money and the volatility that lies within the market. Is there something that you can tell them that can capture those market gains and guard against downturns and also provide income?
Yeah, I think there are some, good choices that are out there. And I think this is an area where, people should be running the fire safety drill right now with the markets at, close to record high. And really what you're trying to do is you're trying to weigh the risk versus the reward when it comes to investing, and then kind of tailoring it down to your own approach. A big part of this comes down to two things. What is your tolerance and level of comfort with risk? So if the market did have a big downturn like it did in 2008, did you make changes to your portfolio? After COVID, did you make changes to your portfolio? Because what you want to do is you want to not make changes to your portfolio after something bad happened. In essence, all you're going to do is lock in losses and not be in a situation where you can, take advantage of gains. So what you have is you have investors that will move in and out of the market, based upon that fear and greed factor. They get greedy when they see that the markets are doing good. They get greedy when they hear about crypto, or greedy when they hear about precious metals or gold. And they jump in when prices are already high. And then they get fearful when things go down and they get out of the market. So the nice thing is when you're talking about some of the things that you had mentioned there, looking at financial products that allow an investor to capture part of the market gain, yet protect them against a defined or certain amount of loss, there are really two different types of products that I think, people may want to consider looking at them. For those of you that are looking at the stock market type of portfolios, what you can consider investing into is what is called a buffer ETF. And what this is this is a type of an investment. It's an exchange-traded fund that's designed to provide the investor with a defined level of protection, or buffer as it's known, against market loss, while allowing that investor to participate into a predetermined cap on an annual basis. Now, I know I just said a mouthful. That's like Wall Street talk there. We can show you visually what it looks like. I'll give you an example. If you had a investment, what it could allow you to do is participate in what the underlying index does. And most common are like the S&P 500 index. So between now and a year from now, the S&P 500 index can only do one of three things. It could go up, it could stay the same, or it could go down.
Right.
Using a buffered ETF, what you could do is you could select a level of protection that you want. And the neat thing about that is those levels of protection are kind of customizable. So you could have a zero being worst case scenario, meaning that you don't want to have any type of downturn over the next 1 or 2 years, or whatever the time frame of that buffered ETF is. In exchange for that, it will give you a cap, and a cap is referring to, say, the maximum level that it allows you to grow. So let's say you had a 0% downside and then a 5% cap. If the market goes up and continues to go up like what it did, say in 2024 when the market was up roughly 20%, the cap would indicate that investor would have got to pay a 5%, of course, minus any fees or expenses that they paid on the account. Mm-hmm. Or if you go back a couple of years ago, like in 2022 when the stock market was negative, if the market's down 20%, if that investor selected a 0% downside, then of course their account is zero. Some people want to have higher growth potential. So let's say that you wanted to have just the first 15% of losses protected. The trade-off of that is then you're going to end up with a higher cap rate. So maybe you get a 7, 8, 9, 10% cap rate in exchange for the first 15% being protected. Again, in that example, let's say the market's down 10, that particular investor is down nothing because of a market decline. Now, the stock market, you still got to take into consideration management fees and expenses.
Of course.
But if the market's down, say, 20%, then they're, the first 15% is protected, they're only down 5. So it helps them, have the ability to stay invested, not make those emotional decisions of trying to figure out when to get in and out of the market with having a determined level of protection. The insurance companies of America have also been doing this for decades as well, and they offer products that are called a fixed index annuity. So with a fixed index annuity, first and foremost, what you're usually doing is you're buying complete protection against loss, meaning that 0 is worst case scenario. The other thing that I like about them is that on a lock-in basis, normally once a year, if an investor has gained in the account, the insurance company is making the deposit into the account owner, and that becomes their new starting point. So think of it like stair steps, right? You can only go up and never go down utilizing the fixed index annuity concept that allows you to participate when the market goes up. Now, annuities can be confusing. In this case, you could have a cap, which would be, again, a maximum level of gain during that predetermined period. Most commonly, those products are 1-year caps, but there are variations that are out there. Some are referred to as participation rates. So if you had a 50% participation rate, that would indicate that you would get half of the return of whatever that underlying index is. So if the index goes up 10%, 50% of that would be a 5% rate of return. But again, giving you that growth potential and helping you, guard against the downside and protect you as well. Some of the insurance companies of America also offer income riders or income options. So if you wanted to have the protection, but you also wanted to have some income as well, those type of products are available on some of the insurance investments as well. So all different ways. If you're weighing the risk versus reward of investing, again, I don't want you to make an emotional decision. While the economy is good, now's the time to have a conversation with us at America's Retirement Headquarters and determine, how can we help you be able to participate, when the market does good, but be able to have some downside protection. And you've got a couple different choices that we can walk you through what your options are so you can make a good, educated decision what's right for you.
As the saying goes, it wasn't raining when Noah built the ark. We hope that, the past 15, 16 years now, barring a couple hiccups, you've been able to reap the benefits of a pretty robust market. But as you get closer and closer to retirement, and we're all certainly closer than we were in 2009, there's something you need to understand. In retirement, approaching retirement, not going backwards is more important than significant gains. But finding that right blend, it's going to vary from person to person. And that is where having a customized plan, a customized retirement team action plan really comes into play to, have it be catered to your circumstances, what you want to achieve. All you need to do to get started, set up a time to speak with America's Retirement Headquarters. You can do that by going to arhq.com or give a call, 419-794-3030. Once again, that number, 419-794-3030. And as always, I want to thank you for joining us here on America's Retirement Headquarters. It is the home of the Retirement Guys Formula, America's Medicare Associates, and Retirement Tax Partners. Hope you have a great week ahead of you. Nolan, as always, appreciate you taking the time to spend with the listeners and viewers. And as we wrap up, I want to leave you with the final word.
Yeah, I hope, Chris, you have a great rest of your weekend. Have a great week. Hope all of our listeners do the same as well. And just remember, when you think retirement, think America's Retirement Headquarters. We're here for your entire retirement.